Okay, hello. Hopefully you have had a chance to work your way through question 8. I'm going to go through the solution to it now. So first thing I asked in part A is using the information provided, use a general journal to close all revenue and expense accounts and to close the profit and loss summary account. Narrations are not required. So first what I would do is go through the accounts we're given, and I'm going to highlight in yellow revenue accounts and highlight in green expense accounts. So accounts payable and accounts receivable, neither revenue or expense. Interest expense is obviously an expense. Cost of sales is an expense. Customs duty is an expense. Discount revenue is revenue. GST clearing is in this case, a liability. Credit balance. Inventory loss is an expense. And sales is a revenue. Okay, so now let's post this in our general journal. So we're asked to do it for December. So end of December, 31 of 12. So let's close off all our expense accounts to start with. Now this is slightly tricky because it doesn't give us debit or credit, just gives us the figures. So we have to understand that our expense accounts will all have debit balances in the trial balance or whatever we were provided with here. So that means to close them, we will need to credit them. So interest expense. Currently it's 500 debit, so to close it, 500 credit. Cost of sales will have to be 145,000 credit. So we've done that one, we've done that one. Customs duty. We will credit that for 1,200. And then inventory loss. That for 450. Now the other side, our debit will go to profit and loss summary. So if we add up our credits, 500 plus 145,000 plus 1,200 plus 450, giving us total expenses for the period 147. Now we need to then close off our revenue accounts, which will have debit balances. Sorry, they will have credit balances. So to close them, we will need to debit them. So discount revenue, we will debit that for 250. Sales, we will debit that for 270,000. Profit and loss summary, our balancing. These will be 270, 250, 270, 250. So the question asks us to close all revenue and expense accounts, which we have done here, but what we also need to do is close the profit and loss summary account. So this is where we transfer our profit and loss that we've made. So if we have a look at our total revenues are greater than our expenses, so we would have made a profit. There is a credit sitting in our profit and loss summary, so to close that we will need to do another debit, so profit and loss summary. We've got 270,250 minus 147,150. So we've got 1, 2, 3, 100. It's a mess. 1, 2, 3, 100. And then we will take our profit to capital by crediting our capital account for 100. So if we were to have a look through the entries to our profit and loss summary, we've got debit and debit, and that will equal this credit here. So our profit and loss summary is also closed now. Now we can move on to our part B of the question with reference to an accounting assumption. Now, this is always going to be period or accrual basis. Take your pick. The explanation is similar. So the first reason, there are two reasons. First reason is to reset the revenue and expense accounts to zero for the next period, and also to match all revenues earned with expenses incurred, so that an accurate net profit can be calculated for the period. Now, just to run you through this explanation, so what this written response does is it demonstrates, I guess, good use of accounting terminology in the fact that it's talking about revenues earned, expenses incurred, net profit as well. So there is your solution to this question. Well done.